Hello everyone, warm welcome. It is time to decode the Economic Times newspaper and today is a special day. Why it is special? Because, we are today completing the 200 episodes of the decoding of the ET Wealth and Economic. I want to acknowledge each one of you who has been coming, participating and making sure that your money life works and it. So thank you so much for coming in, joining, participating. I must tell you this matters. Okay, I think something really happened right now with the internet. Did it? Let me check. Hi guys, are you there? If yes, please share. Okay, I'm not sure. Yes. Hi Kaveri. Yes, sending love and hugs to you too. Today is the 200th episode. We've completed 200 episodes of the decoding of the ET Wealth Economic Times newspapers. Hi Satoshna, welcome. Warm welcome. Awesome. So today, let me see what we are going to cover in the 200th episode. It's a story, okay, on ET Markets page, and it is on brokers cutting the share prices of Infosys. So Infosys is a stock, it's a company, which is the stock of which is listed in the stock market. And brokers, they are saying that they have cut the targets of this company's stock price. They have cut by 4 to 7%, but still they remain positive about this stock. So that's the article we're going to look at today, right now. Hi Karishma, good morning. Thank you. Good wishes and happiness to you too. So I'm now reading. So brokerages cut target prices on Infosys. So the target that Infosys was to hit, it has cut that target price of Infosys, the stock, by 4 to 7%. After the fourth quarter numbers came in below expectations. So what are those numbers? These are financial performance. So after the numbers, the financial performance went down. The stock price, the target price of Infosys has come down too. So they remain bullish. It's saying, however, they remain bullish on the company due to encouraging financial year 2023 growth guidance. So there is future growth which is expected in this coming financial year. So 1st April 2022, the financial year 2022-23 began. In our country, it is from 1st of April to 31st March every year. So financial year 2022-23 began from 1st April 2022. It will continue until 31st March 2023. So it's saying that because the growth is going to be high, it's likely to be high, large bookings are there in the financial year. So it's expected to make money in the coming months. Okay, new financial year, it's going to make money. That's the conversation. So the American depository receipts of Infosys, which was listed on the US bourses, it fell 6% later on Wednesday after the results. Earlier during the day on Wednesday, the stock ended 0.4% at rupees 1748.65 rupees on the BSE. Trimming financial year 2023 and financial year 2024 earnings estimate by 3 to 6% due to cost pressures. So cost pressures are going to come up. Jefferies has cut the target price of Infosys from 2135 to 2050. So can you see, it's a conversation all around pricing. And what is it getting based on? It's getting based on the earnings, the financial performance, the future growth of the company. So the point of decoding this article, why I'm decoding this article is that, looking at just the price is a very, very shallow picture. We tend to look at the price and just trade on the rise of the price. But what is driving that price is what needs to be seen. And what is driving that price is the financial performance, the future growth prospects. At least those are the two things we've just seen in this article. So that's the conversation. Hi Sonika. Kaveri, end March, everything seems to be recovering, but early April it's falling again. Is it because of the final budget? You're trying to understand the bigger picture. Sure. It's good to just keep making notes of all that you can notice. What I'm getting present to is that, with this article, A, we're talking about the future. B, we're talking about the future prices of the stock, and that's based on the estimates, on the likely performance of the stock. So everything is in the future. We don't know what the future is going to be, but this is what it looks like. So Jeffries pointed out that the stock may correct post the earnings, but whenever Infosys has traded at a 10% discount to TCS, its stock has outperformed TCS by 10% in the following 12 months. So now see another pattern between the two big IT stocks, Infosys and TCS. Infosys going down 10% in comparison to TCS, and then outperforming TCS by 10% in the following 12 months. That's the pattern between the two stocks, which is also being talked about in the article. So Morgan Stanley has lowered target price to 1970, and this is from 2050 while maintaining an overweight stance. JP Morgan has also lowered the target price 2200 from 2300. Now JP Morgan is saying Infosys remains our top pick in the sector and stays best positioned to capture share in this growth cycle. So that's the conversation. Okay. Kaveri, it's all like a dance. 2 steps forward, 3 steps back, and sidestep around your partner and swing forward. Yeah, absolutely. Absolutely. So today, what I would invite each one of you to take away is a conversation that stocks is not just trading on its prices. The price is based on something far more fundamental, and you can't have just a shallow view of a stock and just expect to make money. The stock price can be whatever. It can also go down, up, in the short run, whatever. But if it is not driven by strong fundamentals, nothing makes a difference in the long run. Only businesses which make money, only businesses which have strong financial performance will do well in the stock market in the long run. You got to have that basic absolutely clear. Study the fundamentals, study the basics, check the growth prospects, the financial performance, the management committee, everything, the promoters, the board of directors, etc., and then check if a business is worth your hard-earned money. Then only invest in that stock. Otherwise, stay put and enjoy. Let your money die the death of inflation, but don't make the mistake of jumping in for some get-rich-quick scheme, because there's nothing like that. Nothing at all. And I'm speaking from experience. Hi Sheetal, good morning. And on this note, I'm closing this live. Thank you for participating, everybody. Take charge, stay safe, bye-bye. Keep learning, keep growing. And I'm right here to support each one of you to financially thrive. Yes, Kaveri, study, and keep updating our notes. That's the only way forward. Loads of love. Take charge, stay safe, bye-bye.